The amazing thing is that this hidden TradingView indicator is incredibly correct. It predicts the asset's price in the future. In this video, I'll demonstrate a brand new, free indicator that uses price history to attempt to pinpoint the precise future price of a commodity. To support me in continuing to make these free movies, kindly click the like button and subscribe buttons on the video. Let's get started now that we have cleared that up. Go to TradingView first, and then add the indicator to the screen. Search for the Echo indicator under the indicator search option. Choose the Lux Algo indicator and add it to the display. To be able to use the indicator to join profitable positions, let's first attempt to fully comprehend how the indicator functions. The evaluation window, forecast mode, forecast construction, and source can all be found in the indicator options. The evaluation window settings deal with the size of the window that is used to determine whether older observations are comparable to or different from more recent ones. The forecasting range is determined by the forecast window. Whether to use historical parallels or contrasts in the most recent price data depends on the forecast mode. Last but not least, we have the source, which is the setting that enables us to select the input of the forecast. The forecast construction decides how the forecast is constructed. Let's look at the indicator's usage now that we are aware of the settings that are accessible. The indicator not only shows which historical variations have the greatest degree of similarity or dissimilarity, but it can also be used to predict future trends for the asset. As you can see, the chart is plotting three different hues. The price section that will serve as a guide for finding the most comparable historical price segment is determined by the forecasting window, which is orange. As you can see, the gray area here represents the entire evaluation zone, and the green area, when compared to the orange reference area, shows you the portion of the evaluation zone that is the most comparable. I trust you now have a better understanding of the indicator. Let's look at when we will use this indicator to enter a buy position. As you can see, the indicator is indicating that the asset's worth will increase. This suggests that we ought to open a purchase position. The purchase position will be initiated with the stop loss set at the most recent swing low. We'll aim for a risk-to-reward ratio of 1.5 times for the take profit. Here, we can see that the indicator is indicating that the asset's price will likely stay in a downward trajectory. Therefore, let's take a sell stake. Our stop loss will be set at the most recent surge high. We plan to aim for a risk-to-reward ratio of 1.5 times for the take profit. Despite the fact that this signal is very effective, it shouldn't be used by itself. This is supported by the fact that when used independently, the indicator also generates losing signs. In order to increase the profitability of this approach, let's navigate to the Indicator Search tab and add the additional indicators to the chart. Find the SSL Hybrid indicator by first going to the Indicator Search page. Choose the Mickle indicator and add it to the display. The volume oscillator will be the second signal we add to the chart. Add the TradingView volume oscillator indicator to the screen by searching for it and choosing it. All the signs that we needed to include are listed above. Let's modify the indicator settings to make the indicators as effective as possible for the plan. Go to the SSL Hybrid indicator options first, then select the Inputs tab. The baseline duration will increase from 60 to 200. Following that, we must switch the baseline type to the MACD moving average, which was created to monitor the market more accurately than other moving average indicators. Let's now select the Style tab and alter the design preferences. All checkboxes will be cleared, with the exception of the ones for the bar hue and the MA baseline. Change the parameters for the volume oscillator now. Go to the settings for the volume oscillator type. Finally, to determine precisely when to join a position, we will use the Echo Forecast indicator as the entry signal. Let's look at when to join a position now that you are familiar with how each indicator operates and how we will be using it. The following prerequisites must be satisfied before taking a long stance. The price must first be in contact with the top of the prediction window before we can look at the forecast line. To indicate that the uptrend will persist, the line must point upward. We need to look at the SSL Hybrid signal right now. To indicate that we are presently in an uptrend, the candlestick color must be blue. We must examine the volume oscillator indicator to confirm that there is adequate traffic in the market. If the line is above the zero line, we will know there is enough capacity. We must first confirm that the forecast line won't strike the stop loss before it reaches the take profit before we open the position. Click on the long position tool to make sure of this because we'll be using it to plan out the entry. At the most recent swing bottom, we will place the stop loss. We plan to aim for a risk-to-reward ratio of 1.5 times for the take profit. You can see that the take profit will be reached before the stop loss, based on the prediction. Let me now demonstrate a crucial principle for you. As you can see, the price is currently touching the peak of the predicted time frame. Additionally, we observe that the prediction suggests that the price will continue to move upward. Looking at the hue of the bar, we can see that it is blue. This indicates that the SSL indicator's requirements have been satisfied. The volume generator is the last thing we look at, and we can see that the volume line is above the zero line. This indicates that even though all requirements have been met, we won't take the job. If the trade is planned out, the stop loss is placed at the most recent swing bottom, and the take profit is aimed at a risk-to-reward ratio of 1.5. According to the prediction, we will observe that the stop loss will be reached before the take profit. In light of this, we won't take the job. Let's now examine the best time to initiate a sell position. The candlestick must first be in contact with the bottom of the forecast frame before we can proceed. Additionally, the forecast line must be pointing lower to indicate the continuation of the downtrend. The hue of the candlestick, which is also red, indicates that the SSL hybrid requirements have been satisfied. The volume oscillator is the same because, as can be seen, the volume line is above the zero line. Now that all the prerequisites have been satisfied, let's plan the transaction to avoid being stopped out based on the forecast line. We will set the stop loss at the most recent move high and aim for a 1.5 times risk-to-reward ratio for the take profit. As you can see, the prediction line indicates that our stop loss won't be reached before the take profit. Therefore, let's start the transaction. If you want to see one of my other trading strategies I use when day trading, check this video right here, because this strategy works great on the every time frame you want. I'll see you guys next time.